Hello, in today's presentation we will be considering performance appraisal. We will start by considering what performance appraisal entails and its underlying purposes. We will then proceed to analyse the three main methods by which performance can be appraised, commencing with a survey of traits and behavioural methods, so as to draw out key weaknesses which have given prominence to results-based approaches. We will subsequently demonstrate that while results-based analysis, namely through its main conduit of management by objectives, or MBO, is by no means a perfect proxy for gauging and optimizing performance, that it can be modified by practitioners to better incorporate some of the underlying nuances of traits and behavioral methodologies. This last idea will be explored by means of a brief case study of one of our group members' professional employment experiences in the accounting industry. Let's start by considering what performance appraisal is. Performance appraisal is the first step in the broader performance management scheme. Performance appraisal endeavours to measure the job performance of an employee and does this through an examination of the traits, behaviours, and results of individual employees across a range of roles. Broadly speaking, performance appraisal serves four main purposes: identifying the developmental needs of employees to modify training objectives, providing feedback to employees, thereby helping them improve their performance and manage their career, designing equitable reward schemes in the organisation and administering the schemes in a manner conducive to motivating employees, as well as diagnosing latent organisational problems. Two further ancillary uses of performance appraisal are providing data for research on employee performance, training, and the use of targeted reward schemes, as well as providing legal and formal justification for organisational decisions such as retrenchment. Importantly, in order for a performance appraisal system to be useful in a real-world setting, an organisation and its assessor, the ultimate surrogate in this process, need to have a clear understanding of individual job roles and the casos necessary for success in these roles. All jobs are not alike, and without a clear understanding of individual nuances, all supplementary initiatives associated with broader performance management, such as retraining, can become arbitrary with respect to improving underlying employee and consequently organisational performance. This is particularly problematic from a cost minimisation standpoint, as endeavours like retraining are typically very expensive, such that it serves an organisation well to be targeting the right areas for optimising its long-run performance through improving its human capital. There are three overarching frameworks through which we could appraise performance: the traits-oriented method, the behaviour-oriented method, and the results-oriented method. The traits approach focuses on assessing employees against personal qualities, typically 10 to 15, that have been identified in advance as being related to job performance for a given role. Some of these traits may include amicability, initiative, leadership, analytical agility, and job knowledge. Despite its strengths in identifying the importance of characteristics typically required in a given role, the traits method is the least popular of the three methods in isolation, because it is difficult to actually identify relevant traits and measure these traits accurately. Indeed, empirical research conducted by Barrick, Mounts, and Judge has shown that the most significant correlation between a trait and performance on average is a link between conscientiousness and performance, which, despite having a seemingly intuitive nexus, only records a correlation coefficient of 0.28, a hardly statistically significant figure. The behavioural approach endeavours to provide an assessment of employees on a set of core behaviours identified in advance as being related to job performance. Owing to the susceptibility of this scheme to subjective rater bias, the conventional narrative-based assessment of behaviours has been supplemented over time with a host of additional objective-based assessments, including behaviour checklists, rating scales, and critical incident surveys. Again, despite identifying that behaviours account for some magnitude of performance, research by Bomber, Johnson, and Rich, among others, has demonstrated that the coefficient of correlation between constituent behaviours and performance only hovers around 0.30, fractionally higher than traits-based analysis, once again rendering this approach not statistically significant to rely on in isolation. Bomber and Henneman have additionally pointed out that a further weakness with the behavioural approach is that it has a tendency to assume all human beings can embody predetermined behaviours that are seen as being axiomatically positive to performance by the management team. In actuality, however, casting a behaviour mould can have a tendency to yield abnormal or undesirable behaviours on the part of employees to the detriment of an organisation. The results-oriented approach has done much to alleviate the stigma of employee dissatisfaction associated with the murkiness of traits and behavioural ratings approaches, thereby also reducing employee organisational disenfranchisement. At its most rudimentary level, results-oriented appraisals provide an outcomes-based assessment of performance relative to objective benchmarks. These benchmarks can be geared towards meeting very specific individual targets, such as meeting monthly sales targets for a particular product, or more high-level group-based workplace cultural objectives, like achieving a 50% female employee recruitment rate in a calendar year for industries such as finance, where there is a high gender imbalance in the workforce. Empirical research has shown that outcomes-based analysis is conducive to higher levels of workforce participation, given that it allows employees to have a clear indication of what an organization expects of them, thereby allowing them to plan to achieve those objectives. In a study performed in 2001, Donovan observed that a powerful means of increasing motivation and drive in the workplace is to set goals, and we note that the task of setting goals is inherently more straightforward when one has an objective benchmark against which they can formulate those goals. Results-based assessments, therefore, tend to foster a stronger causal link between employees and their organization, with the net implication being greater participation and performance. The primary conduit for results-oriented appraisals has been MBO, which reflects the process of setting specific objectives for each employee's job, along with the milestones and yardsticks for evaluating their performance, often known as the Key Result Areas or KRAs. These KRAs are assessed across a given cycle through interim and final reviews, with the final analysis serving to reward good performance as well as to roll forward fresh or modified objectives based on constituent weaknesses. Analysis by Albrecht and Odeon have done much to cast skepticism over the frequency with which MBO is assessed in practice, alluding to the idea that the model's actual success would depend on perfect alignment at all stages and the ability of supervisors to conduct ongoing reviews and monitoring, an inherently time and effort-consuming task. Indeed, Barton and Kondrasuk observed that this is a major reason why MBO has often failed in practice. MBO has also been criticized for having an overly exclusive focus on outcomes rather than the efforts of employees, neglecting to take into consideration when internal and external circumstances preclude the achievement of outcomes despite the underlying processes and hard work of employees. While these appear to be reasonable arguments, we feel that a malleable modern organisation can overcome them quite easily. To defend this supposition, we draw attention to one of our group members' professional experience at the accounting firm KPMG, and the firm's use of a work planning and review system in line with annual goal setting as a tool of modified MBO. In line with setting KRAs for employee performance, KPMG require all client-facing staff to complete a goal-setting template at the beginning of each fiscal year, targeting developmental objectives across business focus, personal developmental stretch, as well as business as usual expectation. Guidance as to the typical KRAs are provided for different employee levels, so as to give employees a rough expectation as to what the organisation may require of them at particular points in their career. The goals, however, are entirely voluntary, and employees are under no compulsion to stick with meeting pro forma requirements if they feel there are ancillary avenues they would like to focus on or be appraised against. Employees are subsequently required to identify an appraisal timeline against which these goals may be assessed, as well as the key actions they will perform in order to work towards these goals. This allows employees and their respective performance managers to overcome the problems associated with an over-obsession on outcomes, particularly with respect to junior employees who are not explicitly in a revenue-driving role, given the formative nature of their career. This self-control system allows for the identification of process-driven measures, with a much shorter lead time and a more frequent occurrence rate to impact upon the organization's analysis of their efforts. A good example of this notion is the measurement tool of an increasing proficiency with key software platforms, with the supporting action being employee attendance at ongoing training workshops throughout the year. Under this modified version of MBO, an employee is absolved of entity-wide performance deficiencies caused by internal and external factors that are beyond their control, for example, a key client loss, thereby motivating them to continue to perform at the best of their ability and develop core business skills and job competencies even when times for the firm as a whole are tough. Particularly in a high turnover environment, this modified MBO model disassociates client loss from the natural threat of retrenchment for junior employees, which we feel is particularly beneficial for juniors seeking to develop their careers. In sum, we believe that performance appraisal is of integral importance to both organizations and individuals for the multifarious reasons alluded to in this presentation. We recognize the contribution of each of the performance appraisal methods and acknowledge the benefits of each one. Ultimately, however, we feel that the results-based approach is the most effective method and have utilized a practical case study to demonstrate how a malleable organization can overcome the criticisms typically leveled against its main conduit of MBO, thereby making it most relevant for today's workplace.